Hello, everybody. Good evening, good morning, or good lunchtime, maybe, wherever you are in the world. Welcome to today's episode, live episode, I should say, actually, of that crypto show, where we want to have a closer look at the Federal Reserve interest rate decisions. I think it's going to be an exciting episode today, much to talk about. And despite that, also, it's actually quite an exciting week. We still have the ECB coming up also with an interest rate decision. We have earning reports with the likes of Google and Apple sharing their earnings tomorrow. So a lot of volatility probably to be expected on the markets. We'll have a closer look for you today. I'm going to see you again in about 10 seconds. And here we are. And as you can see, and probably also new already because of the thumb, I'm once again joined by fellow trader Jonatan. Am I pronouncing that right, actually?
Yeah, you are. Jonatan Randin. Jonatan.
Jonatan
Yeah.
Randin, better known as Lips42, fellow trader himself. We've done quite a number of live streams together now. Always enjoy having you here. Happy to have you on board again.
Yeah, thank you. I mean, I really do enjoy joining these live streams, and yeah, we've been having these for a while now, and I must say that our analysis has actually been quite maybe not spot on, but definitely interesting here to see how it develops, and it's touching the right levels here, and it's moving according to your the analysis you did like several months ago.
Well, not only this. I mean, this is one part. I know you had a fantastic January as well with amazing results with your trading strategy. And if you don't know Lips yet, you really should check the description of the video. You'll find links to his YouTube. You'll find links to his Twitter account. And you know, it's really amazing what he can do in terms of risk reward with his trading system that he teaches you guys actually. So definitely worth your while. Check it out and click on the links below. And yeah, we are, as always, you are very welcome to ask your questions during this live stream. So we'll definitely have some time, maybe before or shortly after the release of the data in roughly 27 minutes to answer your questions. And I believe we have also a little sweepstake going on Discord again, where you can win a trading account funded with a bit of money, you know, to start your trading career or try out one or two strategies that you maybe didn't want to try out with real money so far. Okay, so time is running, of course. We decided just now that we're going to split this a little bit in half. So Lips is going to focus more on the technical side of things. I'm going to focus more on the fundamental things. And yeah, you want to start today?
Yeah, sure. I think first of all, I kind of want to mention the fact that this week, every day of the week, I believe, was some type of major news event, and it's not only today. Like you mentioned previously, tomorrow we have Bank of England interest rate decision. We have the ECB. You can go to the dailyfx.com page right here, and you will see that you have the Bank of England, the European Central Bank, and then on the February the 3rd, you have the non-farm payroll. So it's like definitely one of the biggest news event in the near term future. So what I did in the beginning was just last end of last week, I decided that I'm not going to be trading this week. Not a single trade. You mentioned that I had a very good January, and it's in terms of win rate, it's been my best January since I started trading my trading career 6 years ago. It's been really, really good. And one of the reasons I had that good of that success in January was because I traded less. Now that might seem counterintuitive to a lot of people, because most people think that as a trader you need to actually trade to make money, which is true in a sense, but you can actually be quite profitable with one good winner every month. So if you have a good winner in a month, you only really need one trade in a month. With that said, there's a few opportunities I see here looking at the charts, especially this on the S&P 500. Now, these are the exact same levels that I had in our last live stream, where we looked at how this is the level that needs to break for this whole downtrend to potentially break. And I'm saying potentially because I'm always very conservative when I'm doing my TA. I need to have like strong high time frame confirmation of a break in market structure, and that would look something like a higher high on the daily and then a higher low. So something like this, a breakout and then a retest of that breakout level. Now the monthly open level for the S&P 500 opened beautifully right here. So we can actually break out and then come down and retest that monthly open and form a higher low. So we have a higher high and a higher low. And if we bounce here and continue higher, that would, in my opinion, confirm the entry into a bull market for the S&P 500. And it's all about the interest rate decision, which is coming up in about 20 minutes, 25 minutes. So, if I'm thinking if it's lower than expected, we're going to absolutely just, we're going to see rocket ships.
Yeah, to the moon.
Yeah, I don't think we're going to see that though. I think it's going to be 25 basis points, 0.25%. I guess. I guess that's the expected, as I can see as well. But if we do move above this level, which is basically the 4,000 to 4,100 area for the S&P 500, if we do continue moving higher and we have several daily closes above, maybe we close the weekly candle above, because you can also see that on this chart right here, the weekly level is very, very obvious. You can kind of see how there's only really, if you can ignore that, you can also see like there's only really wicks coming above here. But if you have like a weekly candle closing above, and on the daily it would have like a rounded retest and a bounce, I think it's safe to say that we're technically in a bull market. Now, what's funny here is if you look at Bitcoin, it kind of seems like we're almost already in a bull market. So I want to zoom out here a little. Let's remove some of these. And on Bitcoin, especially if you look at this, like this move right here, one could definitely argue that, well, aren't we in a bull market? We had this major move to the upside, but we haven't really, in my opinion, properly broken the daily market structure. For us to break the daily market structure, I would want to see these highs being taken out. And it's important to remember as well, we have not seen a significant higher swing low. We only have an up move, right? This up move, it could just be the fact that the S&P 500 is going to get rejected at the current level, and that would just mean that we're in a range on Bitcoin, right? So we could just be in a range. Like, this is a very obvious range with the lows being here, and the range EQ, the middle of the range, is here, and the range high is somewhere around this area. So if the Fed comes out and has like higher than expected interest rate, we're going straight down, and so is the S&P 500. So the S&P 500 has not confirmed a bullish market structure, and Bitcoin has also not confirmed a bullish market structure. However, if Bitcoin moves down here, bounces here, and then breaks out, we now have a significant higher low, a higher swing low in the daily, and this would then be a higher high, and of course that would also be a higher high. And I'm expecting a move up to the 30k region, which is up here. That's what I'm expecting if the Fed comes out with 25 basis point and has dovish comments during the press conference. However, if they come out with a 25 basis point, we might rally. But in the press conference, Powell might speak about, giving us some hawkish signs, which probably will cause price to move lower. But if everything's bullish, I like this is the point where we're going to exit the bear market, in my opinion. Like, I really think we're at that point in time where it's not now or never, but it's definitely now or much later.
Yeah, no, that is I think a good summary. Like now or much later, because if I maybe just bring up my chart here, And wait, this is Bitcoin. No, I want to stay on the side. Like, let's look at the S&P 500. Sorry, I still have a drawing here from an earlier live stream I did. So it's pretty much what you said just now. We broke out of this long-term bear market pattern. It's the first time we've seen higher highs, or at least highs at roughly the same level than before. Before, I mean here in November, early December, what we saw there. And that is the definition, like by a textbook. If you open a book about chart analysis, if you look at how to identify trend, this is the textbook definition of how to break a trend. However, as so often with, of course, coincidence now again with a week like this, where we see so many news coming out, and what I've been thinking really long and hard. How shall I trade this? Shall I trade this at least? And I've actually just come up with one scenario how it makes sense for me to trade this whole revelation of interest rates today. So first of all, I think the reveal of the interest rate is going to be probably a no event. So the last figures I've seen here is a 99.5% expectation of market participants that we are going to see a raise of 25 basis points. So I think that is pretty much set in stone. And like you said before, Lip, it's going to depend on what Jerome Powell is going to tell us half hour later, and how the reading that is. And for me, that's always a little bit absurd, because you have like this one human being that basically has the fate of the financial markets, at least short term, in his hands. So
Yeah.
if he calls at the wrong part of the wrong sentence, the market is going to interpret this maybe as bearish or whatever, or as hawkish.
I wish
or
Bitcoin
dovish.
would listen to me in the same way when I have my live stream. I'm really trying to shout at the screens as much
That
as
would
I
be
can,
awesome.
but
I think you
I don't
probably
have that Powell energy, you know.
you would be the most famous, the PewDiePie of cryptocurrencies, probably then. Yeah.
Yeah.
So it's going to depend on that. And because the interest rate decision itself, I think, is not going to have such a large effect today, because it's just going to be what everybody's expecting already, or what the market is expecting. We need to prepare ourselves for scenarios after this. And as you just said, I mean, it looks like now or later this year, then that we are continuing to break out of this bearish pattern on the stock markets, and also, of course, on Bitcoin. We can look at this later. So my preferred thing, and this would really, in my opinion, show strength in the market, would be maybe that the market, the S&P 500 here in this case, crashes down again to this trend line. So I've just continued the trend line, the bearish trend line here to the right, somewhere into this area, where then I would for sure go long. Why would I go long? Because this is a trade with an extremely positive risk-reward ratio. I can go long here. I can basically, put my stop somewhere here or somewhere here, depending on the time horizon I have with this. And my upside would be really here in the region, in the not too distant future, maybe of 4,200, maybe even up to 4,400. That would really be my preferred scenario, and this would today be the only, not only today, also in the for the rest of the week, if nothing out of the ordinary happens, a trade I would take anytime. As a matter of fact, I did this trade already last Wednesday, when I was on a live stream with the Wolf of Wall Street, Scott Melker, where we bought Bitcoin in this area here of 3,900, and I think it was 78. Sadly, I was stopped out at Bitcoin, S&P 500, sorry. Sadly, I was stopped out there yesterday with a little profit of $1,500 US. Nonetheless, a great trade. So I'm kind of hoping actually that this is going to happen as well. In my opinion, the market is at the moment, so if I look not really on a fundamental level at it, but more from the eyes of a sentiment trader, so to say, I think the market is waiting for hopium today. I think the traders, the big gun traders, the institutional traders sitting in banks, are waiting for Jerome Powell saying something like, Well, inflation is contained. It has been coming down hard the last 3 months, and we did a good job. And now we can focus on when we will lower the interest rates again. I'm exaggerating now a little bit. Of course, you wouldn't choose this wording, but I think this is kind of what the market is expecting. But I think this is not what's going to happen. I think what is going to happen is that we are going to see a copy paste event of the last two interest rate decisions, where Jerome Powell said always the Fed is going to do everything that is necessary to contain inflation, and we are going to keep rates at a higher level for a longer time. And maybe you still remember what happened like last time in when was it? No, I think December it was, no? After this, the market was disappointed because the market wants the quick fix. So I'm
Yeah.
expecting during the speech of Jerome Powell a little bit of disappointment, because he's not going to be so positive in his outlook as everybody wants, because there's still also one missing ingredient. The Federal Reserve Bank wants unemployment to be higher than it is. The job market in the USA is still very strong. Yeah, I know we've seen especially the likes of Apple, of Google, or so-called high-tech industry getting rid of a lot of people and laying off people. But in the grand scheme of things, if you have an unemployment rate of like 2, 3, or 4%, this is still close to full employment of your whole population. And it always sounds, of course, a little bit absurd that the Fed wants more unemployment, but uh, America is an economy that's all about consumer spending. If consumers have less money to spend, means like prices will come down because there's less demand in the market. And I think maybe we're not going to see it actually, but I think the Fed is kind of waiting for that. And it's the last missing piece of a puzzle. So I'm pretty much in line with what I saw on trading economics there today. So first of all, the forecast 4.75% today for the interest rate after 4.5%. So this is the rate hike of 0.25%. But the forecast for the rest of the year is kind of like this, that we now should enter in late Q1 2023, Q2 2023, this plateau in interest rate, and when things are slowly getting better again in terms of not only inflation, of course, of interest rates by the end of the year, which also is kind of nice because it would kind of coincident also with the next halving of Bitcoin, right? So quickly, before I talk too much here, another look here at Bitcoin. My preferred scenario that I've been also talking about for a couple of days now really would be that we get some steam off here. And I think, Lip, we talked about this, if I'm not mistaken, last week as well, so that we drop again into this area, into the area of this fractal here between 20.5 and 21,500, accumulate strength, and then again, and then go to the north. I mean, don't get me wrong. I would absolutely love, of course, if I'm surprised today and the market just goes ballistic, because you guys know I'm heavily invested long term with my long term portfolio in stocks right now, but and in Bitcoin, of course, so everything risk on. But I don't know, and maybe that's the pessimist talking in me. I kind of still am waiting for the scenario that this gets delayed until later of the year. It feels like it's too early. I want it to become true. I want it to become true today. I want to see S&P 500 today at 4,200 points. I want to see Bitcoin at 25,000 US dollars. But it kind of feels like I'm missing something there.
Yeah, and you mentioned something interesting. I mean, a lot of people will. A lot of people are talking about how they would want Powell to talk in a bullish manner, if you will. But that's, I mean, his job is to tell the market to, take it easy. Because if he is, if he comes out with comments which basically lets the market rally right like crazy, he's also doing the opposite of what he's supposed to be doing.
Mm.
Right now, he's supposed to make sure that inflation is not, skyrocketing. And if he tells everyone that, the economy is great, I mean, yeah, you know what I'm saying. Like if he's too dovish, it might cause problem for what he's actually trying to do. And if the market just recovers aggressively here, the unemployment rate is not going to get better for his case. So I think he has to be a bit conservative.
Yes,
So
I think they kind of burned the fingers a bit there last year. I remember May, June when they were talking about still, oh, inflation is going to be transitory. Uh, we all know it has not been, so they lost a lot of credibility, in my opinion, during that time.
yeah,
So they are kind of leaning to the other side, now. Better be too conservative and then later say, like, hey, because we were so conservative, actually the economy recovered faster than everybody expected, than leaning, too much to the side of hopium.
yeah. And I remember last year, he was very, very clear with, they're not going to stop quantitative tightening too early. Like
Yeah,
they would rather be much too late than too early. So I think the market will recover before he admits that it's time to recover. So yeah, which also, it does really line up for some extreme um, unexpected events here. Because what if he's actually, a little bit more dovish? That would be like the market is just, it's like a, yeah, it's it's like
it's a
the lid
powder
is just,
keg with a very small
yeah,
fuse.
exactly. That's what I'm trying to say. It does feel like it's going to explode any minute, and I think he knows that. So he has to be very careful with the words he's going to choose. Um, do you have any? Do you have any strategy? Like, do you trade this event or?
Not the event. However, as always, as we in the good tradition of doing this, of course, I want to seduce you to make a bet. You don't need to
Yeah,
risk your own money. We are going to risk my money for that. Don't worry. On the outcome, just for the fun of it, guys. Please out there, if you're seeing this, don't follow this. This is just a gamble to make things a little bit more exciting. So if I force you now to choose a position, now
well,
which one would you take? For the
uh,
outcome and not talking like just for the next like half hour.
okay. So two things. First, my if well, it's 50-50, so I'm just gonna say up.
It
Right,
is. Yeah.
like it's 50-50, so I'm just gonna say up. And secondly, I do have a way that I'm gonna trade this, and it's the same way
Okay.
I'm always trading the Fed decision. It's whatever happens when the numbers gets released. I'm going to trade in the other direction once the press conference starts.
Yeah,
So
that's kind of true actually.
yeah,
So
and
what do you want? What position do you want me to open for you?
long,
On
long.
in which instrument?
Well, Bitcoin, I guess. Yeah, Bitcoin.
In Bitcoin. Here we go. So let's go to crypto here.
So you want
Bitcoin
like
US dollar.
so you want stop loss and everything?
No. It's just for the fun of it. So we're going to
Okay.
open here a small position in Bitcoin for you. I'm going to buy 0.1 Bitcoin.
Like, of course I'm gonna go long. Like, I don't know.
There we go. I'm going to bet in the other direction, like
Of course, of
as the
course.
immediate reaction just now.
Yeah, and that kind of gets me gets me nervous.
No, I'm notoriously bad when it comes to betting on the results of stuff like this. So
I've been trading this event live for I think six or seven times, and I've only lost once using this strategy. So for
well,
everyone
then I
watching,
should be the one being nervous, I think.
well, it's for everyone watching this. It's actually quite simple. So you want to look at like levels on the 4 hour, the maybe the 1 hour, and like mark out some important levels. Like right now we're in a pretty obvious range for Bitcoins. It's going to be fairly simple to trade this. And imagine, maybe you can switch to my chart
Of
quickly.
course. There we go.
So imagine you have this. Well, it's a range here. So let's add a range, something like this. Okay, so imagine you have the interest rate, the numbers come out, and you get a move like this, right? And it starts moving higher, and maybe 30 minutes later. So let's say maybe, well, it's not going to be up here 30 minutes later. It's maybe here. Who knows? So 30 minutes later, up here. Now the press conference starts. So because the move was bullish, you want to look for shorts. And what I do is, if Bitcoin is trading inside this level at that time, I go down to the 15 minute and I look for a like a break in market structure on the 15 minutes. So imagine if price moves like this on the decision, and it hits a level like this maybe, and then you get on the 50 minutes something like this. I'm gonna short here with stops here, and I'm gonna trade it down to wherever the move started, like that. So it's going to be like, usually it's like 1.5 or 2 hour trade. And it's actually very simple. Wherever the pump starts or wherever the breakout starts, which would be here, that's going to be your target for the short. And the same thing goes for a possible dump. If you come lower here, the press conference starts, you're going to be able to long a break in market structure here for a move up to where the move happened. And because that happens quite a lot in all news events, you get an initial reaction, and then you usually retrace all the way back to the beginning of that reaction. So this is a tip. I definitely recommend you
That is
you
super
guys try it out.
interesting, super valuable information, because I know a lot of you guys out there are very nosy how to, kind of really trade the event. And I know I'm always leaning a lot towards like the swing trades, the long-term trades, the macro picture. So now you have like a bit of a guidebook, a handbook on how to trade this live, really, while you happen. And if you haven't gotten your account ready yet, you still have 2 minutes to do so if you really want to trade this event. And use the promo code Academy 2023 for a 50% discount on your trading fees, which will, by the end of the day, leave more money in your pocket. All the links you need are, of course, in the description of the video. Now I have to look quickly here at so we are still 1.5 minutes. I actually wanted to answer some questions because there are a lot of questions, but maybe we're going to do this after the release of the data. And I think it's also the time here a bit to try out this new cool, is it really new on TradingView, this economic calendar they put on the products here?
Yeah, I
was
think it's
wondering.
new. It looks really cool.
I want to see how fast it is actually.
Yeah,
Because
that would be interesting.
so maybe we can do both. You are probably on. Are you on daily FX right now? Or?
I am on daily FX
So
and
let's
a
see which one is faster.
I'm also on a site called Financial Juice, but I do think daily FX is faster. But what's really faster is Twitter.
Yeah, I know.
So if you have like TweetDeck, and you can in TweetDeck you add like the breaking news, the different news Twitter
Tweet deck is
pages.
something. I'm probably too old for this to
I'm
do
I'm
something
I'm
like this.
I'm not using TweetDeck much. Like I'm very rarely trading these news anyway. Like I like it when there's just no news events. Just
Yeah, because it's I totally agree with that. So 5 seconds to go. Let's see what is happening here.
so we want to look at the
All
numbers, and
right,
then we want to go over to
coming
the
soon. It switched here in real time at least. Do you have any data already?
no.
What is the market doing?
Do I really have to reload? No, I don't have any data. All right, so it's 4.75. So
Yeah,
it's
okay.
as
So
expected.
as expected, we are seeing the S&P really going down now a little bit, which
Whoa.
it's a bit surprising, but
Bit surprising, yeah.
because it's I mean not by a large margin. Let's have a look maybe here quickly at euro dollar as well, going down as well.
So we got
Obviously,
20,
it's
25 basis points.
what you would expect, of course. Raising interest rates is a risk of scenario, but It's not a lot. I mean, we are talking here in euro dollar about like what is that, like 15 bits, and the market is already coming back. So a bit what we expected, kind of a non-event. The
But if you
interesting,
look at Bitcoin, it's definitely a non-event. It's not
there's
doing
like nothing going
anything.
on there really.
Yeah. Which that this is surprising. I haven't seen a lot of Fed interest rate decisions not move the price of Bitcoin like in the first minute or two.
Yeah, I
So,
mean the candle kind of looks like a bit like what we are seeing in the S&P. Oh
oh
my God, it's
wow,
jumping like up and down like
holy!
crazy. I think we are seeing some live liquidations actually going a little bit higher now,
Right,
and
so it's starting to move higher now. Okay.
it's starting to move higher. So let's switch back to your chart. Actually, it's off mine here.
Yeah, so what I'm
Um,
watching here is this very local this local range right here. That's the important range right now. We can go to the, let's see, we can go to the, like you have to look at the lower time frames when you're looking at this. Um, and we want to see right here. Oh, thank you for that nice comment.
they love you. I keep telling you.
So this is the range right here. Okay, so this is the local range, and we're gonna go down to the 5 minute. You look at the 5 minute candle; it's like taking out the range lows and range highs. And yeah, this is the, look at this. This is
Yeah,
like
look,
one
it's like
one
really like that was
yeah
like picture perfect, no?
yeah like one candle just taking that whole range out. So yeah, what we want to see here is like we want to see price break out here, and that might be also where we break. I'm getting a lot of alerts here on my
Yeah,
watch. A
that's
lot of levels are getting
something
broken.
you need to pay attention to right now, maybe.
Not really, but yeah, it's not getting through, not as quickly as I expected, which then puts me in an awkward position when it's time to trade the press conference, right? Because
Yeah, no,
how do
but it
you?
doesn't really. I mean, it means like, and actually, it means you've done everything right. You defined your range well. It
Yeah,
didn't go out of a range, so you're doing nothing. And
exactly.
if you learn one thing from Lip, from me, doing nothing very often is the right choice, actually.
Oh yeah, yeah. I mean, I if it's one thing that I would recommend people do to really improve their trading is trade less. Like
Yeah.
it sounds like this thing you just say, but like it's so so important for me. Like last year, I've started trading maybe 75% less, and I've made much more money and much more progress. So
Mm.
the the problem of over trading is probably the number one cause for failure. Wanting to be in a trade and foaming and that sort of stuff. So we have a really crazy candle here on
That
the
is a
5 minute.
crazy. I mean, we played like both extremes, but for
Yeah,
me, very fascinating. I want what the ranges you drew in there
yeah,
were perfectly respected, and
yeah,
it's kind of it shows. I know people always tell me like technical analysis. It's a one-dimensional solution for a multi-dimensional problem, but this shows it can really help you because it keeps you from FOMOing or flooding into the market just because
yeah,
you see a crazy candle to the north or south, and you had your strategy defined before the release, and because you didn't hit the upper band, you didn't hit the lower band, so you didn't do anything, and that was the exactly right choice because on a candle like this, you can only lose money.
yeah. And I think a lot of people they will maybe see this stream and after because I'm getting a lot of questions on like oh, how did you find that level, or how did you find that range? And the honest question is like I could give you a very advanced question talking about I don't know, like Elliott wave and order blocks and all that sort of stuff, like, but the thing is really is this range. I define this range because I've been looking at these levels and these price charts for 6 years.
Mm.
Every day for 6 years, I've been doing this, just finding horizontal levels and these low time frame ranges. So I can't really give a clear answer. It's just for me, it just looks like this is where the levels are supposed to be, and it just works out. So what I would say is like when you're starting out with technical analysis, just keep it simple and just go with the flow. Whatever's working is working, and you don't complicate things too much. Like there's for me there's obviously some type of level going through this area right here, which is the range high, and there's like some type of level going through this area. You don't have to make it too complicated. Like who cares if the levels is not perfect, or you're using the newest and best indicator, and the you bought a course on how to identify a specific pattern and stuff like that. Like it's all about very simple stuff. It's just horizontal levels. You're adding a couple of trend lines. Like what the difference between the difference between a really good trader and a beginner trader is, in terms of technical analysis, not much. But the difference is your mental state of mind, right?
Yeah.
It's really, are you able to just not trade when you're supposed to not be trading? I think it really comes down to your mental state of mind. And like anyone can draw levels like I'm doing. It's nothing advanced at all about this.
Yeah, it's not rocket science,
Yeah.
exactly. But a good example, after you've been watching charts, after you've been watching price action for a prolonged time, you kind of get a feeling like where are levels in the market where price action is likely to reverse into the opposite direction again.
Yeah.
And it's really, I also always fail to explain this in the right manner because it's like a gut feeling. It's a gut feeling when I look at a chart that I've been monitoring for a long time and I draw in levels. It's like I cannot tell you like why I draw the levels there. It's just because of what I've been seeing, experiencing before.
Do you know about the book Trading in the Zone?
Yeah, I do. It's a book I
So
very much enjoy.
yeah, so for me that's like my trading bible. I read it, like I haven't read it in a while, but a couple of times every year. um and that has been like a major turning point in my career, when I kind of understood what he actually talked about. And what I realized, this like last year, was that I'm getting very close to the intuitive stage of trading, which is
Yeah,
that last stage of trading. And that's, I believe that's what we're seeing here. Like I don't know why I'm adding these levels. I just know that it's right for me to do so. And that's my brain. Through all these years of experience, my brain has picked up signals, and I can't tell you why these signals work, but my brain obviously unconsciously has in the background picked up certain signs in the markets that it knows this is what works. And I just follow that intuitive feeling. It's the same when you see a setup and you take, like, it's the right trade to take, and you take the trade like completely effortlessly, and there's no fear, there's nothing. It just works, and you just flow in and out of the market. And I think that's something a lot of people, you can't achieve that level of trading um, easily, and you have to be ready to spend many years. I remember I tweeted about yesterday about how if you want to become a lawyer, you need to spend like 3 to 5 years in university, and if you want to become a doctor, you probably need to spend closer to 7 years only to learn the basics. To become a trader, all you have to do is open a brokerage account and place a trade, and now you're a trader. But you probably need to spend the same amount of time as the lawyers and the doctors to make the same amount of money. And that's
yeah,
because it takes a long time to get to that intuitive stage of trading. And I know a lot of viewers watching this channel are like new traders, and it's all about staying in the game. It's all about staying alive in the game, managing the risk, not getting blown out, and still having money, to trade the next day.
absolutely. And I mean, I'm really impressed. I must say, really, really, really impressed because you don't see um, things like this, at least on a short time frame, a bit often. I think it's a great display of your capabilities, and it's a great example also of what in sports probably you would call muscle memory. If
Yeah.
you have are playing tennis and your opponent makes like a very fast ball or whatever, where normally you never could react to, and your muscles just react to it and return it perfectly. So this is what we're seeing here. The brain is a muscle; it can be trained, and on a subconscious level, then it will automatically also execute or give you the right signals if you're willing to listen to them. Shall
But you know,
we? Yeah.
but you know, it's the same when you look at your macro analysis. I mean, we looked at a soft landing. I think it was like last summer we talked about that, right? Like last summer we talked about the potential soft landing in that zone that has now been hit, and
Yeah,
it's
maybe it is, but and this is also why I like to do live streams with you, because we add to each other's weaknesses, so to say.
yeah,
let's
no,
let's
definitely.
let's have a look at some questions. Maybe we've seen a lot of questions popping up here in the live chat. Maybe the first one here from Mundo M Crypto. Boa tarde. That sounds Spanish, Portuguese. I'm not sure. Do you think that perhaps Forex is more stable market to trade until crypto achieve a safe increase? So better trade Forex until you are very sure that the crypto market is going to go up. I'm just assuming that this is your question right now. Um,
Yeah, so
what do you say to this?
yeah, so well, I can say that started trading crypto in 2017 and started trading forex in 2019. And in my opinion, the forex market, at least for me, is much more consistent, giving me much more consistent profits, and it's just such a joy trading because it doesn't matter if it's a bull market or a bear market. Currencies will become stronger and weaker against each other no matter what the world economy looks like. However, crypto is a risk on assets. There are currencies that are risk on and risk off, and they will move in trends no matter what the macroeconomics of the world is doing. But Bitcoin, when you're trading Bitcoin and altcoins, you're trading a risk on asset. You're trading a risk asset, which will always be in a bear market in a risk on off scenario, and always be in a bull market when there's a risk on scenario. And in my opinion, crypto is much easier to be trading when it's in a bull market, especially altcoins. When Bitcoin is trending and altcoins follow, it's the easiest market to trade. But when Bitcoin is ranging, it becomes complicated. And when Bitcoin is in a bear market, it is very, very, very hard. So what
Mm,
I would say is you mix the both. If you're a technical trader like me, you want to mix the both. And you have PrimeXBT where you can sign up and get an account. And you can trade both the altcoin market, Bitcoin, and Forex on the same account. And that's what I'm doing with the same system. And the best way to answer this is try it out yourself and see if you like it or not, and what type of what type of gains you can make. But is it better to trade forex and wait till crypto to achieve, like, I guess, stable levels or trend? Like you have to have a plan and you have to have a system, and when that system gives you an entry trigger, you take the trade. It's simple as that. This question tells me that you don't have a system. So you
mm.
need to get if you're a technical trader, develop a system and try it out. That's the only way you can do this. That's the only way you can do this. So get a system, test it, back test it. When you know it's working, you trade it and you take every trade that it signals you to take, no matter if it's in the forex market or the crypto market or whatever. If you have that mindset, you don't care what Bitcoin or whatever is doing.
Yeah, that's very very true in my opinion. Another angle here, of course, is like, when can you decide that crypto is a safe increase? And
Yeah,
it's
that's
like
hard.
never, and when it's like down like crazy at 16 and a half thousand, nobody wanted to buy it. Everybody
Yeah,
was calling for 12,000, 10,000, and now that it's up by 30%, everybody's calling for 30,000. So when is it safe? Safe at 30, 35, 40, 69, when we make a new all-time high. You missed like a lot of performance already. Hard to tell. And this is the dilemma of a trader, that at least long term, we always need to be a bit of a contrarian trader. We need to be there and be ready to buy when nobody else wants to buy. I think
Yeah,
there's a saying like you need to buy when the blood is on the street, and
yeah.
this is what we've been doing, no, for the past couple of months.
I think you said that this is a trader's dilemma, but actually I think this is an investor's dilemma.
It's
I
an
think
investor's
a
dilemma. You're right.
a trader, as a trader, I don't have any problems like that. I don't ask myself when should I buy Bitcoin. Like
Mm.
I I follow my system religiously. I don't have any problems like that. However, as an investor, as a long term investor, it is the hardest thing, and that's why I'm not a long term investor, because Bitcoin has now rallied like 50% from the lows, and I'm like, if you're not in at this price, how are you going to figure out if it's a good time to buy or not?
Yeah,
It's the $1 million question. It's like, it's so hard, and that's why I choose to trade whatever price is giving me, because I can't stomach the drawdowns of that sort of ranges.
yeah. You found your way that is correct for you. I found my way that is correct for me, and if we can teach you guys out there how to find your way, your personal way, how to invest or trade, whatever you choose, or maybe you choose a mixture of both paths, then it's mission accomplished. Maybe two more questions, and then we are going to call it a night. This one I think is very interesting. Francesco La Tatara, I hope I pronounced that right. I read somewhere that in March of 1980, interest rates were at 20%. We have to worry, or can we sleep peacefully? It must be said that in December 2008, they were at 0.25%. What is the direction? So this is a question aiming. I don't know where you're from. If you're from South America, probably these type of interest rates are still something you're dealing with, if not higher. And but do you think this is a danger we are seeing, that we are going back to a interest rate inflation environment long term? I remember last time we had in around 1990, and I remember this because young Dirk back then, I had a saving account at a bank, and I was always happy because the bank would raise my saving interest rate to something like 6, 7, and 8%.
Yeah, I it's yeah, it's one of those questions, and in one of those scenarios where you're like, it's so hard to try to understand where we're going. I think if I I don't think they're gonna raise interest rates that aggressively. I don't think so. I'm not seeing, the economy is slowing down. We are seeing signs of the economy slowing down. And if the like everyone's talking about a recession, and it's probably not we're probably not going to get a recession because everyone's talking about it. But if we do get a recession, we're absolutely not gonna get those interest rates. But what if inflation just continues going higher? That's the danger, if the Fed can't tame inflation. If they can't tame inflation at this point, we're in for some really bad time, I believe. And yeah, I don't know. What do you think? Do you think like that's extremely high?
Yeah, of course it's like hard because we all haven't been in an environment like this. I
No.
just said it beginning of the 90s. I know a lot of you guys out there weren't born then, and I actually was young at the time in my life as well. So I was like 13 or 14 years old there, and but of course, a lot of you guys grew up in an environment where there were always kind of lowish interest rates. And this is kind of some Weimar Republic stuff I'm reading here. So we're talking about hyperinflation. Let's be
Yeah.
very precise, and we could argue and talk about this probably for hours. But in my opinion, the one thing that will hinder interest rates to go that high is that there's no country on earth, no first world country, I have to say, on earth that can really afford this. I mean, with the interest rates we are looking at the moment, we are having a scenario where the US refinancing their treasury bills have to pay, I think I read something like 1.8 or 2 trillion US dollars in interest more, just because we rose from those 0.25% now to 4.5%. imagine that going up to 20%. I
Yeah.
think there are other things we need to worry about then.
We do have one interesting question we might want to cover, and it's the one where why does FOMC often hit both sides? And
So where's Whitbone? Do you see the time that was posted?
yeah, 2018.
2018. Ah, okay, that's the last one actually here.
I think
Yeah, that's a good question. Yeah.
so. This is actually something I'm thinking about as well. Why this happens? Why, like, you look at this candle right here now? Why is both the shorts getting stopped out and the longs getting stopped out? How does that actually? Why is that happening? How is that? Because it happens all the time. Every
Yeah.
time it happens. And why is that
And
happening?
especially on the stock market or indices,
Yeah.
right? Yeah, that is really first of all super good question. So thank you, Alia. And it is really because of algorithms. So on the stock markets, there is like an 85%, and that number is actually a couple of years ago, old already. So that's like, I think from 2019, 85% of the trading action intraday is done by algorithms.
Hmm.
So that usually are black boxes, and like nobody, they are developed with the help of machine learning. They give you kind of like an edge on the, let's say, like 1 minute, 5 minute charts, or even shorter time frames. And then you have algorithms hunting those algorithms, and those algorithms are good in one thing. They like to look at areas where there's human action. So Lip just defined those areas, and probably he was not the only one actually defining those areas, but the algorithms knew, like, okay, there's going to be some action. There's going to be a likelihood that the price is going to reverse there. So they are going to take action. It sounds very, very abstract. And it's kind of also a little bit dangerous because a lot of those algorithms are really black box algorithms. They also cause sometimes what you see on the news called flash crashes. Those, like when suddenly within like 15 seconds the S&P 500 drops to 100 points, not by 100 points but to 100 points, and then the next tick is again at 4,000 points. And it's a danger. You see this especially in stock trading. You see this also more and more in cryptocurrency trading, and it's one of the reasons, honestly speaking from my heart, why I tend to not engage in this news trading action so much.
Yeah, you have to be very, very, very sophisticated to be trading the news. I mean,
Yeah,
there's so extremely advanced algorithm out there, and you have basically AIs that are scanning the news. Like you have an FMC statement, you have like AI scanning the text, and then like
yeah,
in a matter of milliseconds knowing the possible direction of price. So trading the news, when you're trading the news as a normal retail trader, you're not trading against the best of the best. You're trading against computers that are like reacting so much quicker than you. So that's why I like staying on the higher time frames and swing
yeah,
trading. It's much easier to get rid of that. Interestingly enough, when you talk about algorithms in trading, there are some really interesting theories of where the next artificial intelligence is going to be developed, like the next super intelligence. And a lot of people say that it's either going to be in the defense department or in the financial markets,
yeah.
because in the
That's
financial
the most
markets, like,
funding in both areas, no?
yeah, has so much money, and like that's the if there ever is a holy grail in trading, that's the holy grail of trading,
Yeah.
a algorithm that becomes super intelligent and just completely destroys the market. And yeah, that's definitely
And
a
completely
very,
destroys humanity.
yeah, yeah, yeah.
Who knows?
It starts with S&P 500, and then it starts building these Skynet networks.
Yeah, exactly. The trading profits are converted into nuclear rockets, man. Just
Yeah.
kidding. Oh my God, we are like getting dystopian here, actually. So
Yeah.
let's have a quick look here at our trades. Nothing much going on there. We both managed to lose some money. That's interesting. We traded in opposite
Well,
directions.
that's what it is. I mean, you
Hmm.
can open a long and a short, and you're gonna lose money on both. That's a perfect Like that's a perfect example of why you're not supposed to be trading the news. And in the beginning, I said that I had a strategy of trading the opposite move of at the press conference, but there is no move to trade here.
Yeah, exactly.
So there's
So
not
this
going
is
to
a
be a
good
trade.
example, really, why you shouldn't be trading the news release itself. It's a whole different story, of course, with what we're going to see during the press conference. But this is a story for a different time. We are slowly coming to an end of this live stream. Jonatan, thank you for joining me here tonight. It's always more fun to do this together than doing this alone. And
Yes.
you guys out there, also thank you for joining us. I hope you managed to keep your trading portfolio stable, or maybe even win some money. We never know. If you want to know more about the outcome of the press conference, feel free to check out the description of this video. Join the Academy Telegram channel. I'm for sure going to comment on this later or tomorrow morning, depending on how exciting the whole speech of Powell is going to be. And yeah, we are going to see each other very, very soon again. So thanks again for being with us tonight, for joining us here. Take care and bye-bye.
Thanks, everyone.